Good evening and welcome back to the Failed Breakdown channel. Bit of an interesting day today. It's Monday, the 8th of December, and it's been a slightly unusual day in that ES has been taking the stairs down all day today as opposed to the elevator. So interesting in the sense that they're slightly unusual and a lot we can learn from today that we can use next time this happens. For me personally, I took a loss on the 68.57, and then I missed the trade of the day down at 68.47. But we'll get into the charts and take a look at both of those, and maybe take a look at some other potential setups that looked like they were going to develop but never did. As always, this is based to the best of my ability on methodology taught by Adam Mancini. Highly recommend everyone subscribe to his newsletter, follow him, and you will learn far more than you ever will from listening to me. Alright, let's get into the charts. Okay, so super quick on the context. We'd been working higher all of last week in this nice upsloping channel on the back of a very strong Thanksgiving week. This is actually showing price as of, (3:15) in the afternoon on Monday, so basically at the end of the session today, but coming into today's session we just kind of held up higher from the Sunday open. We had a little failed breakdown here. I think what was the level, 68.77, kind of held higher before working down and grinding lower for basically the entirety of the day with just small bounces. So let's take a look at the day. I think the main point today really is that we've just been grinding lower all day. So the first thing we're looking for as a failed breakdown traders is the significant lows, and we've got plenty of those to work with, either through the newsletter or your own plan. But the second step is we want that scary flush, and we haven't really seen that at all today. This is a little indicator that looks at the gradient of price, or gradient of the lows, and it basically tries to identify when price has put in what I would consider a scary flush, and just to try and quantify it. And what I'm doing here is looking at a flush of greater than 0.75 points per minute as a sort of threshold there. When it does exceed that, it paints a bar red. And so what you're looking for is that scary flush to be occurring through a significant low. And as you can see, that doesn't happen at all throughout the day. We got this one up here, but it didn't really pass through a significant low, and it certainly didn't trigger an entry. So there's a first caution there. Just an indication that ES is just grinding lower. We're not getting those scary flushes to entice and trap shorts. So just something to be aware of, on its own. Probably not a single, you don't ever want to just take a single invalidation and not enter a trade, but there's other mitigating circumstances and that we can layer onto that perhaps help us to avoid taking trades and taking losses. Okay, I'm going to switch over to my other platform and we'll get into some of the specific trades that set up or almost set up. Okay, I don't think I'm going to replay the action today. I'm just going to talk through some of the setups on this static chart or live chart. So we're about 15 minutes before the close at the moment. But let's get into the open here, back to the open. So right off the open, we started to break down the overnight levels and the kind of add-on strength levels from Adam's newsletter at firstly 68.84 and then 68.77. And 68.77 was the first level I was watching, looking to engage in. But it was pretty clear right off the open that the sell or the flush really just wasn't scary in any way. I mean, it took a while to break through the level. Kind of what I was showing you back on that trading view chart. We just weren't selling at a rate high enough to kind of classify as a scary flush. But we did start to put in type 2 acceptance of this level where we broke the level recovered it, up to the 80s, up to 68.80, and then dipped back again. But this was actually really similar to last Thursday's trade that I took a loss on. And what I didn't like about this was that lazy flush in combination with the type 2 acceptance making a lower low here. And so when we pushed back above the level, I was super cautious, was giving it extra time to hold above the level there. It never did, and then we just sold off. So I was fairly happy to avoid that trade, but wasn't able to apply that later in the day. But a couple of invalidations there, just to throw that out there for you guys to think about and maybe avoid taking some of these trades when they're not favorable. So moving on down, we continued to sell off. Got a little blip here at the first level down at 68.68, but nothing really of interest. And there was potential, I think, to get trapped here as well, right at this point here. So that's down here. And what we had here is we tested the 57. We broke through the level, a little bit more speed in the flush, but still didn't qualify as a scary flush in my book. And if I were replaying this, there was the smallest blip, kind of type 1 acceptance here. But just looking at the range chart, I mean, you could kind of see it in real time, but looking at the range chart, you can see it didn't print like a lower bar and then come back up. For type 1 acceptance, I would really want to see it do this. Print down here and then push up through the level to engage a little bit above, but it didn't do that. It just kind of lifted small little oscillations here up and down, but nothing that I would consider like a down rotation. And then we just fell away. Interesting to note in the background here, we've kind of got looks like we might finally be triggering this 47 failed breakdown. We've been accepting it all through the afternoon. Let's see if we can get a push through there in the last 15 minutes here, but I'll keep half an eye on that as I talk through the rest of the action. Okay, so then we moved on down. So that, another trade that didn't trigger. This guy didn't trigger. This one didn't trigger. And then we get down to the trade that I did take and potentially invalid too here, but based on some of Adam's messaging on Twitter. So we again flushed through, but we'd really just been descending at the same rate at this point. So I ended up getting in somewhere right about here. But what I liked about this trade was kind of the type 1 acceptance, where we broke through the level by the I'm talking about the 57 level here, which was the prior day's low from Friday. So we broke through that level, came back up, tested, dipped, and see the difference between this and this here. Let me just erase all of that. There's no dip and return. Here we got a bit of a dip and return. I suppose the one thing I didn't quite like about this, it wasn't perfect in that you're really just sort of barcoding in this. We're just printing side by side. I much prefer to see, cleaner structure where we have more pronounced dips and returns. But nevertheless, I still class that as type 1 acceptance there. And then we pushed back up through the level, and I entered, I forget exactly, somewhere around 58 or 59, and ultimately ended up getting trapped here. The missing piece really with this is just the lack of volatility and lack of speed of movement. See how these bars are just stacking side by side constantly, and we'd had that slow lazy flush. Something Adam said in his tweets was, when we're the type 3 acceptance where we wait for the 5-point danger zone to clear is primarily for high volatility conditions, but you can also apply it to these low volatility, slow, lazy days, just to use as a buffer so that you're really waiting for price to turn around before engaging in a level. I did also like at this point the fact that we kind of broken out of this downward sloping channel and we were starting to show signs of life, but in the end, that one closed for a loss. So not ideal for me. Taking a full stop on this strategy is always painful. So yeah, I closed out for a loss below the low, and that meant I was somewhat disengaged, and I wasn't really prepared to engage on this 68.47, but this one's set up much more cleanly. So looking at the range chart, see how you're kind of getting free space to the left and right of each bar. We're not stacking side by side. So a little bit of sort of a small double dip fail breakdown. We break the low, recover, dip below again. The difference between a double dip fail breakdown and type 2 acceptance is, I suppose, really just the size. So it's the same form as a double dip fail breakdown, but I think that's really just classified as type 2 acceptance here, where we recover the level by a handful of points, about 5 points in this case, dip below, make a lower low, which is always a little bit of a caution, but then we push back up with some good momentum here, and then maybe a final dip here. Seeing this candle here, you can see it on the 5-minute here as well. Final little dip of type 2 acceptance in here that allows us to get long and run it up to 57 and a little bit beyond. Couldn't hold the 57 level in the end, and ultimately broke down there. So yeah, there was a nice trade in this 47 level, but you had to wait a long time for it. Had to wait all day. Potentially getting a 47 reclaim here into the end of the day. Let's see, still hasn't broken through that level. And then there was another trade some in the group took around this 36 to 38 level, and on this one we would be using the non-acceptance protocol really to engage, or a combination of type 2 and the non-acceptance. So depending on where you had your level drawn, the low was actually at 36. From the newsletter I had mine at 38, and I decided not to engage in this just because of the kind of choppiness, and it's just been a slow grind of the day, and I'm waiting to see if something's going to trigger here, if we can push back above 47 into the close, but it's getting pretty tight now. Anyway, that's it for this review. We'll catch you in the next one. Thanks.